Hey, geniuses! Listen closely to this one. Our heavyweights, Alan and Steven, are going to break down the big picture of the stock market. You won't want to miss a word. Enjoy.
What is the stock market? Before getting involved in any system, you need to understand the rules of that system so you can interact with it successfully. And now we're talking about the stock market, so we need to know a couple things. So, Alan, what is the stock market?
Well, it's a place to make money is the intent. And that's where you're investing in other people's businesses so that you get a benefit as their business improves its worth. But I would start out by thinking a lot like a grocery market, because a market is a place where you exchange one thing for another thing. Usually, in this case, it's you want money if you're selling groceries. And if you're somebody that wants groceries, you give money to get the groceries. Well, the stock market is the same thinking. It's very basic that way. You want an opportunity to be part of a company that is growing in value. So when you look at Microsoft or Tesla or Apple or any of those, you think that it's going to be worth more if you buy shares of the company. And that's what the stock market does. It lets you own a small piece, super tiny or large, depending on what you can afford, in a company that you think is going to do better than how it is today. Some people put their money in a bank and they'll get whatever interest rate is posted at the bank, and you can shop around at banks and see what kind of interest rates you'll get. Well, the stock market is much more dynamic than what the bank says, hey, I'm going to give you. In this sense, you're actually wanting to buy a piece of the bank because the bank is a company. And so there is actually the effect of supply and demand. We talked about the grocery market before. You don't actually have the grocery market where people say, hey, I'll give you 10 more cents for those avocados. Well, that won't happen in a grocery store because there's only so many, and that's how it is. Other people in the grocery store can't buy and sell the groceries. Only the store offers it. Well, that's the difference between a stock market. You have a bunch of people holding these things, these shares in these companies, and they say, hey, I'm willing to sell it if when the price gets to a certain point, too low or too high, I'm willing to sell it. And that's where a buyer may say, well, I want it really badly. Using the grocery store example, if you really, really, really needed avocados badly and the store is out, you could, come up with some clever way to go get them and pay more money. And so that's where the price is driven by the demand. It's like if you said you needed to get your child a certain toy for Christmas, you've seen these kinds of things in the past where people just pay these nutty prices for these toys. Well, that's supply and demand. So the stock market has an active electronic supply and demand where the price goes up and down every few seconds. It's going up and down based on the belief that people have of what the company is worth. Well, I'm not selling for this price. Oh, I will sell for that price. That's the thinking behind what drives the price. Well, no, my shares in Tesla are worth a lot more and I'm going to hang on to them. Then people will hang on and the price goes up because nobody wants to sell. If everybody hates the shares in the company, they don't like the company's future prospects right now, they're worried, they'll sell it, in which case the price becomes cheap.
The big takeaways. It's not simply about liking a company. Can you buy and sell shares of that company for the right price in order to make a profit with your trading strategy? In order to understand that, you need to know how supply and demand affect those prices, the fluctuations, before you ever consider becoming a part owner, literally, of that company. Good work, guys. We'll see you next time.